ET Now. Now, Westlife Food has reported a mixed June quarter with revenue rising nearly 12% on continued demand across its McDonald's network, while profit has declined amid softer margins. Now, we'll be going across to the management in just a bit, but let's just quickly do a stock check at this point in time. Westlife Foodworld, nearly 1.5% up, trading in the margin of about 495 rupees. And it has also, in fact, in the past week seen a 6% jump. Let's go to Mr. Akshay Jatia, the CEO of Westlife. Hi, Mr. Jatia. Thank you very much for being with us. Now, let's get straight down to business. Now, revenue growth of 12% with 4.3 SSG. What transpired in the quarter gone by?
As we've been saying regularly, we've been focusing on ensuring that we give value for money to our customers, even more so through our everyday value meals, as well as through our on-ground execution. So that momentum has been building from around Q3 last year. You saw it translate in Q4, and in Q1 this year, the momentum has further built. So we're very encouraged with this double-digit sales growth, which has actually come on the back of double-digit guest count growth. So that means a lot more customers have visited McDonald's this quarter, and that's a result of all our efforts, both in terms of ensuring that our product price proposition is right for customers, as well as the experience that we give them in the restaurants is what McDonald's stands for.
All right, when we talk about the demand trends across regions, what's the current status?
So the demand trend has been very encouraging. Obviously, we are seeing that customers are going out more to eat. And as a result of a lot of expansion in the informal eat out, as well as the Western fast food category, we're seeing customers more comfortable eating out. As a result, obviously, as McDonald's and Westlife, our strong penetration has made our brand and our company ubiquitous. And we've been able to take advantage of this expansion in terms of demand. And because we're continuing to offer customers that fantastic McDonald's experience, as well as the value for money that they're looking for, we've seen a lot more guest counts or footfalls, as you all call it, entering our restaurants.
Yes, absolutely. Now, consumer sentiment, of course, appears to be improving. Are you seeing recovery across all segments? Or is demand still, skewed actually towards value-conscious consumers?
So we are seeing broad-based recovery. Obviously, our entry value meal or our entry-level products do bring in a lot more customers because that price point is important. But as these customers are coming in, we're seeing good amount of trade-ups. We're additionally also seeing broad-based growth across all our markets. So even the southern part of the country, where we have over half the number of our restaurants, we've finally been able to see positive momentum in terms of same-store sales growth. And this really encourages us in terms of potential for both the region as well as for our network.
But then is the recovery broad-based across metros and smaller towns, or tier 2 and tier 3 are slightly outperforming?
Again, I think it's broad-based now because I think the demand, consumption expansion has been structural, as well as it's been structural at our end in terms of our company's efforts. So I don't think it's only momentum-led, which means that it's broad-based. It's across tier 1, 2, 3. Obviously, there are many markets which are, seeing McDonald's for the first time in the tier 3 segment. And over there, you do see encouraging starting signs. Those markets do stabilize, and we continue to see, similar traction as we see in the tier 1 and tier 2, which are more developed and more penetrated. But I think what's really encouraged us is that this growth is broad-based. And we are seeing, encouraging trends in terms of consumers across cities.
And in fact, from 4.3 SSG in QY FY27, how could the SSG trend shape up in the coming quarters? And what's your target for FY27?
So while we don't give forward-looking guidance beyond the point, I think, we are very encouraged with this number that we've delivered. We do believe mid-single digits should hold off in the quarters to come. So we're quite positive about delivering that type of mid-single digit same-store sales growth. And that could be the guidance for this year as well. But that will take us closer to our Vision 2027, which is our overall guidance, for this calendar year as well as the next.
All right, but given the inflationary environment, is this a concern from an industry perspective? Is the worst of inflation impact behind us? Can we say that?
So I think inflation has kind of become the new normal. I would say that obviously the last quarter has been quite volatile in terms of external impact, which we have seen impact our P&L. But at the same time, I think our biggest job to be done was bringing customers to our restaurants and driving growth. I think in terms of inflation, we've developed a very strong playbook in terms of, removing inflation, bringing costs down, building operational efficiencies, and we're going to continue to let that play out. And I think even more so as we've seen growth come in. So inflation, I think, is here to stay. It is a pressure that, the entire category, the entire industry is facing, but it's something that's become normal in today's life and today's world. So I think it's part of our accountability as an organization to manage that and deliver the growth and profitability that we aspire to get.
And are you planning any price increases in the coming quarters if food inflation persists?
So, price is always something that you have to use strategically. We will definitely take price this year as we always have in terms of making sure that it's scientific and doesn't impact our customer negatively. Usually the range we give is anywhere between, 2 to 4% a year. And I don't see us kind of exceeding those thresholds. That being said, obviously in such an environment, price is a lever that most businesses do have to use. And I think that we will use it strategically. But that being said, I think our entire focus is on bringing customers back to the restaurant, giving them value for money. And we've been able to display that this quarter, and we're quite confident that this momentum will continue to play out.
Company also added 5 restaurants during the quarter, now to achieve 580 to 630 restaurants by December 2027. What will be the store addition target for the year now?
So we don't give out quarter by quarter guidance, but I think the guidance that we've given out for this year is about 60 plus new restaurants, and we are on track to deliver that. This quarter has been a little slower, but it's mainly due to on-ground execution, and we have planned for the coming quarters to make up for this deficit that we've delivered this quarter, and we're very confident that the 60 plus new restaurants will be delivered for the financial year.
All right. Now, in fact, competition in QSR, of course, does remain quite intense with aggressive discounting across brands. So has that competitive environment become more rational recently?
See, competition and competitive intensity in our category has always been there, is currently there, and will continue to be there. Despite that, we have to continue to grow. We have to continue to grow profitably, and we have to deliver, the results that we are capable of. So I think that for us obviously always remains at the back of our mind, but it's never something that impacts our decision making, nor is it something that we're worried about. In fact, competition is great for our category as well as for our industry because it exposes a lot more people to eating out options. And when that happens, McDonald's stands out because what we do is we deliver differentiated value for money for our customers. So I think by doing that, we'll continue to stay ahead of the pack and be the undisputed market leaders that, McDonald's has always known to be across the world.
All right, Akshay, I think that's all the time we have for this particular interaction, but thank you so much for giving us your time and answering all the questions. Thanks.